Mira Business FM, Dubai's home of business radio.
It's the morning drive, it's Mira Business FM. The geopolitics driving oil and gas prices next. The global energy market is facing a moment of serious uncertainty, escalating tensions involving Iran and disruptions around the Straits of Hormuz. One of the world's most critical energy choke points are pushing oil and gas prices higher, raising questions about supply security. Brent crude has surged amid fears that shipments through the Gulf could be disrupted. Analysts are warning prices could climb even further if tensions do persist. What does it all mean for the GCC, for global markets, the outlook for oil and gas? To talk about that, we're joined by Robin Mills. He's the CEO of Qamar Energy and is also a leading regional energy analyst. Robin, I appreciate you coming on this morning.
Thank you. Good morning, everyone.
Morning to you. Lots of questions. Bear with me as they kind of bubble up and come to mind. Robin, can I begin with your thoughts kind of broadly on just the seriousness of the current situation in the Gulf for global oil and gas markets right now?
Well, this is huge. I mean, of course, it's incredibly serious. This is the biggest disruption of this type that we've seen in the oil market for 50 years or so. And we've never been in a situation where the transit of oil and gas in and out of the Gulf was cut off in this way. So oil prices are perhaps surprising they haven't gone higher so far, but I think we can expect that they likely will go higher. And gas prices have jumped a lot in Asia and Europe with the cut off of liquefied natural gas supplies mostly from Qatar.
The Straits of Hormuz handles a huge share of global energy trades. I wonder if you can provide just some clarity over the situation on the route. I know that we've had the US president suggesting the US Navy could escort vessels through the Straits. We have seen at least one Suezmax tanker successfully transit to Abu Dhabi. I wonder how much of this is selective disruption targeting Western linked vessels, or am I reading the situation wrongly?
Right. So, I mean, Hormuz in normal times would be carrying something like 20% of the world's oil exports, something like 16% of the world's liquefied natural gas. And now it's carrying very, very little, almost nothing. Yes, as you say, a few tankers have gone in, gone out, but almost nothing. And we've seen a few attacks on tankers, mostly actually just outside the Gulf, but in kind of neighbouring areas. On the whole, nothing that serious. But the thing at the moment is really, look, firstly, shippers don't want to risk the route, don't want to risk their vessels and their people until they can be confident the security is okay. And secondly is the issue of insurance. All the previous insurance is now not valid, been cancelled. So shippers need to find new insurance, and the insurers are mostly not willing to offer insurance under these circumstances. So those are the problems. You know, wherever a vessel is from, whether it's from this region or European or US or from China or India or any other place. So those problems have got to be solved before ships can start moving freely again.
There's almost an issue of the market effectively kind of self-closing in a way, even without any form of blockade, because of the sheer cost of indemnity. If war risk premiums have moved so high, shipping rates for VLCCs, the very large crude carriers, have hit something like $200,000 a day, I'm reading.
Yeah, sure. And insurance premium have jumped, and often the case that insurance is simply not available at all to go into the Gulf right now.
This is the crystal ball question, Robin. If the situation escalates, we see tensions continue in a similar fashion. How high could oil realistically go short term?
Well, it could easily go over $100 per barrel. Look, I think we've seen already Iraq closing down a lot of its production because its storage tanks are full. It can't export, so it's simply got nowhere to put the oil. So it's had to close down. If this continues over a few more days, we will see other countries, Kuwait, for example, reaching the same situation. And then oil prices will certainly really start escalating. If we see vessels being attacked more seriously, we have seen reports of an attack off Kuwait just in the past few hours, then also that will push up oil prices as well.
What options are open for oil producers? There's concern about supply of Iraqi oil, which some goes north via a pipeline through Turkey. I understand that, but most Iraqi crude moves through the southern port in Basra and in turn through the Straits of Hormuz. Saudi's east-west pipeline, the UAE's Habshan Fujairah line can bypass the Straits of Hormuz, but even at full capacity, it's nowhere near what's necessary. What options are there?
Well, that's right. I mean, you've named them, right? So we would normally have 20 million barrels per day going out of the Straits, get perhaps up to 7 through the Saudi pipeline to the Red Sea. But there are kind of logistical issues at the other end there. 1.7 million through the UAE pipeline from Habshan to Fujairah. And then the Iraqi pipeline through Turkey has actually been closed off already. It shut down almost immediately over other kind of safety concerns. So so less than half of the total, and all of that is really the UAE and Saudi. The other producers don't have any alternative.
Before February the 28th, the market was in significant surplus. Something like 1.2 billion barrels of emergency stocks were held by international agency members. How quickly does the global economy burn through those numbers?
Yeah, so the global economy at least comes into this crisis on the back of quite comfortable stocks. And in principle, every member of the International Energy Agency, which is the major developed economies, is meant to hold at least 90 days of oil in storage. So in the US, Europe, Japan, and so on. And China built up huge stocks last year, at least 120 days of its use. So we'll have to see how the Chinese use their stocks. That'll be very important. But in principle, there's at least a couple of months of cover for a disruption. And the disruption, of course, is very large right now, but it's not total, and other producers around the world will keep going.
Beyond oil, how exposed is the global LNG market to disruption in this region?
Well, yes, if anything, I'm kind of more concerned about the global gas LNG market. Because we're coming into this just out of winter in the Northern Hemisphere. European stocks are extremely low. It was a cold winter in Europe, a lot of gas used for heating. So the cutoff of LNG, which we've seen now 100% with the shutdown of the Qatari LNG facilities, that will make itself felt very quickly. And indeed, oil prices are up 20-30% or so, but gas prices in Europe have more than doubled. Because that market is much tighter.
So you would imagine to me, it seems as though Europe's energy security is as vulnerable as perhaps it was a few years ago at the start of the Russia-Ukraine crisis.
Yeah, I mean, this cutoff is not, if you look at the volumes on a kind of global basis, is not as bad as the Russian cutoff, but it comes on top of the Russian one, of course. So Russia, if this crisis happened pre-2022 and Russia was supplying Europe, there'd be a lot more flexibility in the system. Now, everybody else, it's like the US, the other major global LNG producer, or Australia, they're all producing at maximum anyway. There's very little spare in the system.
Final few questions for you, and a very broad question, first of all. Advice for businesses and governments in the region, what to prepare for if volatility, the likes of which we're seeing right now, continues?
Well, it's difficult, and I think the situation of businesses in this region is different from that of businesses elsewhere in the world, because oil production in this region is going to continue for domestic use at least. And refineries will keep running. I don't think we have to worry about fuel shortages here, but we do have to worry, of course, about all kinds of other disruption. Obviously, flights being a major one, and then shipping, arrival of supplies, and so on. So, kind of the problems are a bit different, but very real.
In terms of long-term strategy, is this kind of the death knell for those kind of the just-in-time global energy supply chain? Do you think companies and I guess countries should be moving towards a just-in-case kind of energy hoarding policy?
Well, look, I think we saw this after COVID, and again after the Russian invasion of Ukraine, that indeed there was a lot more concern about supply chains, about having reserves and strategic stocks, and having multiple suppliers, even if those weren't necessarily the cheapest supplier on the day. But there's quite a bit further to go on that. I think the oil market is well used to this situation because back in the 70s, of course, there were two major oil crises, and that's why we have strategic stocks today. It's why we have those 90 days of storage in most countries around the world. So the oil market has always recognized this need. The gas market too, but the gas market's been hit by two crises in quick succession, which have really been hard to absorb.
From your point of view, and I guess I'm asking as well, but, what are energy traders, what are companies watching most closely at the moment?
Well, what they want to see is when is transit of the Gulf going to resume, and how much will there still be some disruption, or will it kind of get back to normal? And we've seen the US floating a proposal to escort vessels, and also to backstop insurance. I think that's not a bad idea in concept, but in the details of that are quite difficult to work out, and we're probably looking at weeks to put that in place. Or will there be a military or diplomatic solution to this, and the fighting will stop or ease off to the extent that ships can come back? Until that, this is really a hard problem to solve.
Final question, Robin, and it's lots of things coming to me at the moment, of course, but I'm interested in your thoughts on the US kind of domestic politics aspects of this. The US produces more oil than any other country, of course. Operation Epic Fury has sent gas prices up something like 20 cents a gallon, about 7% in just a few days. And unless this ends quickly, Americans will probably pay a lot more for their gas, their petrol, no matter how much is produced at home. President Trump previously touted a return to $2 gas. Those prices have spiked above $3. Just interested in your thoughts on how this administration manages the narrative that a foreign policy choice is directly undoing a domestic economic win.
Yeah, well, from a political point of view, this is problematic. I mean, okay, it's been a few days, so I think the political pressure probably is not heating up yet, but it absolutely will. And particularly if oil prices go much higher, and given that this was clearly a US choice, not something that was forced on this administration. Donald Trump is very sensitive to domestic petrol, gasoline prices, of course. But so far, prices just over $80 per barrel for crude oil. It's not particularly high. Prices were higher than this all through 2022, 3 and 4. But there will be some political pressure coming on, and particularly if prices go higher. And we will see higher prices at the pump because of shutdowns and interruptions of refining. So we'll see petrol, diesel, and jet fuel prices, of course, and airline tickets all going much higher potentially if this crisis drags on.
Robin Mills, appreciate you joining us this morning. Robin is the CEO of Qamar Energy. Thanks for joining us at Mirror Business FM, Robin.
Thank you.
Appreciate you being with us. This is Mirror Business FM. It's the morning drive here. Just a reminder, you can find us and get updated with our news on X, the former Twitter, our website, mirrorbusiness.fm, and also on our Mirror Business FM WhatsApp channel. Very easy to find. And everything we do, you can find all our content repurposed on YouTube and across podcast platforms as well. Just search Mirror Business FM.